Good morning, traders. My name is Sihlengema from Stock Market College. Welcome to our technical analysis workshop. Indicate if you can hear me. There is a chat tool at the bottom of your screen. You can use that. Pietro is already typing his message. Thank you so much, Pietro. Oh, okay, guys. Thank you so much. Okay, guys. Okay, who's new to this session? Who's never attended? Kingsley Jones. Okay. Let me check. Tem. Okay, let me check. Tem. Oh, okay, Temba. Tembu Mkululi. Kumalo. Okay. It's Temba. Okay, two. It's. Well, I think that's Mr. Jones. Hi, Gert. How's it? Okay, so it's just the two of you. Okay, let me check. Mswazi. Litebe Mswazi. Litebe, are you not new? Joseph also? Abram? Joseph, Abram, Litebe? I think all of you guys are new. Good, Kingsley, good. Sure, okay. Okay, so I don't really know where to start because there are guys that have been doing this for quite some time. Okay, guys, do you have any stocks that you have analyzed? I'm referring to Gert, Juanita, and Pietro. Guys, are there any shares that you've tried to analyze over the past couple of days that you'd like us to look at? Today, I want us to look at weekly analysis, like weekly analysis. I don't know if I've done this with you. Weekly analysis. I want us to have a look at this one once again so that we get ready for the following week. I want us to do that. We'll look at RLO and we'll also look at PIK. But guys, please allow me a chance. I just want to show the new guys. Okay, and Bulletin also. Okay, I just want to show the new guys how we analyze shares. I just want to show them quickly. It's not the full explanation, but I just want them to get an idea as to what we are doing. Those of you that are joining us for the first time, please focus. Pay some attention. I'll do this just for 5 minutes. Then from there we'll get into the actual analysis, weekly analysis that I want us to have a look at with the guys. I will use my usual stocks. I'll use BAT. BAT is great. Yo, Raymond is back. Hi, Raymond. How's it? What's happening? The last time I saw you was in, when was it? I think maybe 2-3 months ago. Okay. Okay, guys, to those of you that are new, we are using candlesticks here. I will show you different chart types that we have. Let me remove this line. Different chart types that we have. We have a line chart. We have a line chart, bar chart, candlesticks. So I'll just focus on these three for now. Line chart looks like this. It's just a straight line. You get it at the top here. Bar chart looks like this. This is your bar chart. And the one we are using is called a candlestick. I will show you next week maybe how you read these candlesticks. Today I'll just show you how to get the trend, doing trend analysis, understanding whether the market is rising or falling. Because you are still new in trading, I'm not going to be talking terms such as higher highs and lower highs and higher highs. I'm not going to be talking about that. I just want you to use this simple indicator. If you want to apply this indicator, you right click on the screen of your computer. You right click. You come down here where it says indicators. You go to add indicator. click add indicator. You are looking for a moving average. The moving average that we are looking for is called a simple moving average. Simple moving average. Then you go okay. Once you are on the simple moving average, when you get to this window here, let me delete this. You get a default period of 1 on the simple moving average. The default period is 1, but I want us to make this 10. Just make this 10. You can highlight and type 10 and go OK. The moving average is this red line that's overlaid on our chart. That's the moving average I'm talking about. Okay. Okay, this is the moving average. When the price is above the moving average, or these candles show you the price. So when the candles are above the moving average, it means that this market is rising. When the price falls below the simple moving average, it means that that market is now declining. So Trade has been a sell since June 2016. End of June 2016, it's been a sell. The whole of 2014, 2015, and well, I mean, the first half of 2016, it was a buy because it was trading above the simple moving average. Okay, so let me go back and check Litebe, Mashike, Abram, Mr. Kumalo, Kingsley. Do you guys understand? Do you guys understand what I'm trying to explain here? If you are confused, you don't know whether the stock is going up, you just apply this simple technique. Check whether the price is above the simple moving average or below the moving average. If it's below the moving average, it means it's falling. If it is above, it means it is rising. The time frame that we are using the monthly time frame. Why am I using the monthly time frame? The reason for me using the monthly time frame is because it's giving me a bigger picture, an overview of what is likely to happen going forward over the next couple of months. I'm not just focusing on the short-term time frame. I want to make sure that I cover a very long time. Well, I mean, the reason I set it on 10, I looked at the 200 moving average. So if you look at the year, you trade more or less 10 months a year. So when the stock is above your 10 simple or your 10-month moving average, it means that that stock is on a rise. There is some momentum behind it pushing it up. If it is below, it means that that market is going down. That's what it means. It means that the market is going down. So I like using the 10. I use the 10 everywhere. I use the 10 on the hourly, on the daily, on the weekly. It always gives me the best results, Lawrence. That's why I like using it. It's not too lagging. It's close enough to the price. So any difference that takes place in the price gets reflected almost immediately when using the simple moving average. Okay. Now let's look at another stock. Let's look at Sasol. We're applying the same technique. We are using the monthly time frame. I know some of you don't have the monthly time frame. This is what you do to have the monthly time frame on your charts or on your screen. You go to time at the top there. You go to time. If you don't have the monthly time frame, 1 capital M. If you put your cursor on it, it should say value 1 and period month. 1 minute says value 1 period minute. You must be very careful there. And the M there is a small letter on minutes. It's a small letter M, whereas on the monthly time frame, it's a capital M. That's what you do. to make sure that you are on the right time frame. Okay, let's look at Sasol. 2014 October, end of October, it crossed below its simple moving average, and this price started declining, started coming down. Whereas in 2013, it had crossed and stayed above the simple moving average, and the whole of 2013 and maybe the 3/4 of 2016, the market was just rising. The market kept on rising the whole time. So this means we had a bullish market until our end of October 2013, when the price closed below and the price started declining. This is when you were not supposed to be caught buying Sasol. We're just supposed to sell only on Sasol. Okay, another stock I want us to look at. It was on the news late last year, I think. I think in December. The name of the stock is Steinhoff. Steinhoff crossed below its moving average in September 2016. It crossed below its simple moving average in September 2016, and the price fell. September 2016, price crossed below and it started dropping. So as long as the stock is below the simple moving average, that stock should not be bought, it should be sold. So eventually in December 2017, the price declined 91.7% when some scandal broke out, and a lot of investors lost money on Steinhoff. Why did they lose money? They lost money because they weren't supposed to be buying Steinhoff anyway, because Steinhoff was trading below its simple moving average. There are instances when you can buy stocks that are trading below their simple moving averages. There are instances where you can do that, but here you weren't supposed to be buying Steinhoff. There was no reason. Even if you're looking at the fundamental analysis, as long as your technicals are showing you that the stock is under pressure, you don't buy it. Okay, now let me do this. Let me, Kingsley, please give me a stock. Give me a stock quickly. I want you to tell me what do you think is happening there. Please give me that stock. I want to check if you understand what I'm trying to explain here before I move on to the actual analysis. Okay, let me check. Okay. Oh, okay, Arun. We'll have a look at DSY and FSR. For now, I'm just giving the new guys just a breakdown on how we do analysis, and I will do the actual analysis once I'm happy that they understand a little bit of what's going on here. Okay, Kingsley, you gave me IPL. Okay, let's have a look at IPL. We will use the same time frame, the monthly time frame. Okay, Kingsley, what do you think is happening here on Imperial, according to what I've just taught you now? You think it's starting to fall? Okay, well, let me correct you there. End of May, we closed below the simple moving average. End of May, we closed below the simple moving average, which is a bearish signal. We closed below, and in June we're up 5%. Sorry, we're down 5%, a further 5%. If you put your cursor on the candle, you can see at the top here. You see here there are values here. There is the open. Open is for is the open where the stock opened. High is the highest point that the stock reached. The low is the lowest point the stock reached. The close is where the stock closed. Percentage change, or this change percentage sign, is a percentage change. So if you put your cursor on the candle or the bar, you get to see the percentage change at the top. Currently, the percentage change, well, in June, the percentage change was 5.14, close was 19589, low was 18683, high was 21410, open was 20650. That's what the open was. So we closed end of May, we closed down 15.12%. and the stock was closed at 204. So we have been declining for a bit, but the overall trend on this one is up. But the main thing that I want us to focus on right now is whether we are trading above or below the simple moving average. That's what I'm looking for, Kingsley. The answer that I need from you, say the stock is below the simple moving average. That's all I need. So if it's what does it mean if it's below the simple moving average? It means that that stock is selling off. The stock is declining. It's going down. That's what I need. Every time when you're looking at a stock, ask yourself this question: is the stock below or above the moving average? If it's below, it means that the stock is declining. If it is above, it means that the stock is rising. That's how I want you to. That's how I want you guys to look at it. Tell me if it's below or tell me if it's below. So above or below. So this one is below. So it's not good for a buy right now. I will tell you when it becomes good for a buy. I will be doing analysis later. I will show you exactly what you should be on a lookout for to understand exactly whether the stock is a buy or not. Okay, now let me. Raymond, wait. I'm coming. Please give me time. I'm still dealing with these with the new guys for now. Mashike, could you please give me a stock there or a share, JSE listed share, currency pair, commodity, anything? Okay, Mr. Kumalo. Okay, you're giving me MTN. Let's have a look at MTN. Okay, Mr. Kumalo, tell me what's going on in MTN. Please give me the answer that I'm expecting. It's below. Okay, that's no, Temba. I said don't say it's declining. Say is the stock below or above the simple moving average? That's what I'm looking for. If it's below, say it's below. Because I mean, that's the first step. That's the first step. That's the first. That's the first step. That's the first step I'm looking at. There's a guy disturbing me outside here, guys. Don't know. He doesn't see I'm busy here. Okay, so MTN, we are not supposed to be buying CML Temba. You are supposed to be selling MTN. Yes, Mashike, the stock is below the simple moving average. Okay. Okay, Mashike, please give me a stock, give me a share. Which share do you want me to look at? Please give me one quickly. Anyone amongst the new guys, please give me a stock or a share. Okay, Billiton. Billiton is BIL. Okay, BIL CFD. We're using the same time frame, the monthly time frame. Mashike, where is this one? Or how is it looking? We've got DS. Okay. It's above the moving average, so you should be looking to buy here. Okay, Joseph, you gave me Vodacom. Okay, let's have a look at Vodacom. Vodacom, Joseph. It's below, so you should be looking to sell this one. Thank you very much, guys. This is so nice. I love this. Okay, Temba, let's look at your DSY quickly. DSY Temba. Can you see DSY there, Mr. Kumalo? Okay, yeah, it's below. So, okay, so if it's below, you should be looking to one word, guys. One word. We should be looking to sell. Thank you. So it's more like we're on the same page now. We understand each other. Okay, let me go here. Hey Leroux, you've just joined us. Puti Mashala, Abraham Sachwa, you guys are not responding. What's going on? Do you have any issues? Are you okay? Do you understand what I've just explained here now? If you don't understand, please let me know. Litebe Mswazi. Utlutleng Marintwane, please respond. Temba, Kingsley, they've been very, very, very interactive. I like that. Okay, Arun, Lawrence, Kingsley, let me wait for you guys to finish typing your messages there before we actually go to those analysis. You understand? Okay, you understand, Kingsley. Okay, perfect. Thank you so much. Puti, you understand? Lawrence, you're telling me that you can't see the charts. Where do you click? Let me check. Why can't you see it? Please disconnect and reconnect, Lawrence. Please try that. Please disconnect and reconnect once again. You should be able to connect eventually. Oh, okay. I understand what you're saying there, Arun. But I mean, for now, I was just using the monthly time frame to let the guys understand what we are doing. We are just using the yeah. That's what we are trying to do there. Okay. This is the monthly moving average is below, but I mean, this is what you need to do to get into the trade. You must now check your daily time frame. You must now check your daily time frame immediately after checking your monthly. After checking the monthly is saying sell, yes. Now you have to check what the daily time frame is saying, because the daily time frame could be saying buy. So before you do anything, the daily time frame has to agree with the monthly time frame. Are we together there, guys? The monthly time frame has to agree with the daily time frame before you can buy or sell. If the monthly time frame is below the moving average, the daily time frame should also be below the moving average before you do anything. If the moving average on the daily time frame is is saying buy, and when the monthly is saying sell, you don't sell until the daily says sell. They need to agree. Do you guys understand what I'm trying to explain here? The new guys. Okay. Let's do this one. Let's do DSY. Do we all agree that the DSY is saying sell? Do we all agree there? Yes, we all agree that DSY is saying sell. Mashike is still busy typing his message. Okay, Mashike, please finish up so that you don't get left behind. Yes, that is true. That is true. I understand. But I'm just giving you an overview of what you should look at when analyzing, more especially if you are new to trading, you've never traded before. I understand. The weekly time frame is very important. In fact, the analysis that we're going to be doing next, they are going to be based on the weekly time frame. I'm just going to be focusing on the weekly time frame alone, but I need you to have some background on this part of long-term analysis. Okay, the weekly time frame is saying, the daily time frame is saying, the monthly time frame is saying sell. Let's check the daily time frame now. What is the daily time frame saying? Yes, guys, I agree with you. The daily time frame is saying sell because we closed below the simple moving average on Friday. The moving average is at 152.36 and the actual close is at 149.66. So we are supposed to be, I mean, Monday. Maybe you should jump in for a short on DSY. You should jump in for a short. We're gonna do some more analysis and understand exactly what's going on here. We're going to do some analysis and understand exactly what's going on. Okay, I understand, Arun. You make sense. Okay, so this is what you wait. This is what you wait for. There's another one that we looked at. We looked at bulletin. Let's look at bulletin. Let's look at bulletin. Let's look at the at the monthly time. Sorry, monthly time frame first. Okay, bulletin. Let's check bulletin. What is bulletin saying, guys? What is bulletin saying we should do here? The analysis we're looking at here. What is it saying? We are above the moving average. It says buy. So we should go in and take some longs there and buy. Okay, now let's check our daily time frame now. Let's see what our daily time frame is saying. Daily time frame. Yes, daily time frame is saying sell. Okay, so what do we do here now? What do we do? What do we do, guys, here? Okay, we stay out, we do nothing, we leave it, we wait, we do nothing. Okay, 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 exactly. That's what I was looking for, Ututleng. I was looking for that. Stay out until they both agree, until they both say one thing. Stay out until stay out until your daily says buy. Before your daily gives you a buy signal, you don't do anything. You need to wait for a daily to first give you the buy signal before you go in and take a long. Yes, you stay out, but until when? We need to understand that part. Until the daily give us a buy signal. Okay, I'm happy with this so far. Okay, Pietro, Utliteng, Lawrence, please finish typing your messages, guys. Okay, you saying I must explain yearly, monthly time frame. Okay, okay, I'll come to that, but I don't know if you'll have enough time there, Lawrence. But I mean, we'll do that. Utliteng is saying I'm able to place an order. Though in the meantime, no, don't place an order because you don't know what's going to happen next. Wait for the market to first give you a signal. Once the market has given you the signal, then you can jump in and take a long. Before the market gives you a long, don't go in. Don't. Unless if you have some proper analysis you are looking at. We are not predicting, we are following what the market is doing. No, Mashika, you cannot go short because for you to take a decision, you have to you have to get a signal from the monthly saying sell and a signal from the daily saying sell. If you get two conflicting signal, you stay out. You wait for the market to first give you a buy signal if the month is saying buy, a sell signal if the month is saying sell. So you cannot do that. No, don't do that. Don't go short. I want us to be very, very, very conservative right now. You can do that later when you become more knowledgeable, when you become more experienced in trading. For now, let's just do baby steps. You know, when we really get to understand it, then we can start maybe going back and forth. I don't want you to get confused and end up losing money. uh, Arun, yes, we are always using the 50 and the 200. That is, yeah, those are the two standard moving averages that most of the guys in the market use. But when you do more of your own research, sometimes you start to understand the market maybe differently. That is why maybe I prefer using the 10 instead of the 50. You can use the 50 and the 200 just to confirm, but the main focus should be, in my view, should be on 10. 10 simple moving average. You can have your 50 and your 200, but the main focus for me should be on the 10 simple moving average because it's very close to the price. It's lagging, yes, but it's not too far away from the price. Okay, no one knows what the future price action is going to be on Monday. Yes, no one knows. We'll check. We'll check. We don't know what's going to happen next. Okay, so guys, do you understand this part? Can I move on now? Okay, what I will be looking at is a little bit different. It's a little bit different, but I mean, this is the first thing that you need to do when you're doing your analysis. This is the first thing you need to do. Why is there two time frames on the toolbar? Which toolbar are you talking about? Which toolbar? Are you talking about this, Pietro? No, 1 day and the 6 months. Well, I mean, 6 months on 1 day time frame is a default number of months that you can get. Okay, the default number of months is 6 months, but I mean when you go there, you can just go months, click on that, then you get more data. I prefer using 15 years because you get all the data on the daily time frame. You can just go there and get 15 years. Arun, yeah, it's fine. We will, well, I mean, we'll talk about that. I'll forward it to the relevant individuals like Jacques and Tafara. They'll see what they do with this one. I'll make sure that they get this message. Thank you so much for bringing it up, though, Arun. Okay, every time you must go there, make it 15 years to get more data. Okay, Arun, it's fine. We'll talk about that one. Okay, bulletin is saying sell on the daily, buy on the monthly. Okay, now I want us to go to the weekly time frame. We are applying the same analysis on the weekly time frame. This one, weekly time frame. Weekly time frame is saying sell. It closed below the simple moving average on Friday. That's not a good sign. That's a very bad sign. That's a very, very, very bad sign on Billiton. Very bad sign. I don't like what's happening there. Yes, it's on 2 years, but you can always to that 2 years click on it, Lawrence, and get 15 years. Did you see what I've just done? You go there, click on that arrow pointing down, and click on that 15 years. And it changes to 15 years. It gives you more data if you do that. Okay, Lawrence, please finish typing. Are you happy with this? Well, I mean, don't worry about that for now, Lawrence. Don't worry about that for now. Just focus on the simple moving average, understanding your support and resistance. We'll get to that eventually. We will get to that eventually. You want the US 500 and the top 40. Okay, we'll have a look at those. Okay, the weekly time frame closed below the simple moving average. This is what we need to do now. This is what we need to do. I want us to mark the close and the open. Could you please give me the close and the open on this bar, guys? It's on. It's here. The values are here at the top here. I've put the cursor on this one. I need the close and the open on Billiton on the weekly time frame. Close and the open. Okay. Okay, guys, I'm happy with that. The open was 302.50 and the close was 292.09. What is the percentage change? Please give me the percentage change there. Percentage change is negative. It's negative 3.44%. So we went down. Okay, I want us to mark to put two horizontal lines on the open and the close. This is how you draw your lines. You can go there if you like. Click there. Click on the pen at the top. You click at the pen and you come down here on the side. Click here. It gives you different options. You have a horizontal line, vertical line, you have a line, you have price channel, you have a regression channel, you have Andrews pitchfork. So we are looking for a horizontal line. This is our open. I want us to highlight it. I come down at the bottom here and I click highlight. I go back there to my lines. I get my horizontal line there and I go to the close and I highlight. Why are we highlighting that area? I'm highlighting that area because this is where the stock opened for the week and it ended here at the bottom. I want us to focus more between these two values for the new week. The new week is starting long. Okay, I'll tell you now. Okay, new week. Let me do this. New week. It starts on Monday the 16th and it ends on the 20th on Friday. Starts Monday the 16th and it ends Friday the 20th. Our trading week. So during that period, I expect the price to trade within this range. If you break above 302.54, which is last week's close, if you close above 302, no, open, sorry, it's last week's open. If you close above 302.50, it means that the market or bulletin is now starting to look better, is starting to break out, because I mean this is our resistance there at the top, weekly resistance, let me call it weekly resistance and weekly support. Weekly resistance and weekly support. So if we break below 292, 292.09, maybe on Monday, Tuesday, Wednesday, any of those days, we get a daily close below this area here, that would mean that our stock is continuing to decline. So it's important that you mark this area. You mark the weekly close and the weekly open. Do you guys, are you guys following me here? Do you understand why we have to mark there? Do you understand? So you expect the market to trade within this zone. I understand that it's a negative market. It's bearish. So this is your weekly support and weekly resistance. It's not long-term resistance, not long-term support, just for the week. You are boxing the price. You want to make sure that you focus on that specific area, to make sure that you do not miss any opportunities if you are following a stock. On bulletin, if we get a close below 292, would want to sell. If we cross above 302.50, would want to buy, because it means that the stock is breaking out of our resistance. Okay, let us look at the last week candle on bulletin. I'm talking about this bar here. Let us forget about this one. I want us to move these lines from here to this bar. Please give me the open and the close on this one. I want us to do some analysis on it and show you what you should have done on this one. Based on the weekly analysis. Oh, sorry. Sorry guys, sorry about that. I moved the cursor away by accident. I'm very sorry. Okay, the open is 305.71 and the close is 298.33. $298.33. Okay, let's move. Let's borrow these lines here. These horizontal lines. You can move them. You can just click on them and drag. Okay, so last week we were focusing on 305.71 and 298.33, or we can just call it 305 and 298.33. That was our main focus last week. Okay, now let's change this to a daily time frame now. I understand that we are above our simple moving average here. That part I understand. Let's forget about the moving average for now. In fact, let me remove it for now. Let me just remove it. I just want to show you how to analyze. Even if you're not using the simple moving average, you can still analyze successfully and be able to make money out of the market. So we are focusing on 305 and 298. Okay, let's do this. Let's make it 15 years. Okay. Okay. When did that week start? Let's check. The previous week. I started on the 2nd. It started on the 2nd and it ended on the 6th. It started on the 2nd, it ended on the 6th. So when was the 6th? The 6th was here. No. The 6th was here. The 6th is when the week ended. And on the 11th, the new week. On the 11th, the new week, that was on Wednesday. Can you see that? That was on Wednesday last week. On the 11th, we closed below our weekly support. Do we all see our weekly support? I'll mark it in black. Our weekly support. Our weekly support is black here around 298.44. That's our resistance at the top, and we closed below here. This is when you're supposed to go in and take a short on Billiton on the 11th, according to the weekly analysis. That's when you're supposed to go in and take a short. If you apply your simple moving average there, let us see if the simple moving average agrees with that. We are just focusing on weekly analysis. We closed below the simple moving average there. You see that? We closed below the moving average. On the 12th, the market dropped 1.81%. On the 13th, we dropped a further 1.12%. 1.12%. Do we all understand? Joseph is not getting this. Okay? Jacques? Okay. What is it that you didn't understand, Joseph? Please tell me so that I can go back and explain. Yes, I'm talking about the percentage change. On the 12th, the percentage change was a negative 1.81. And on the 12th, percentage change was 1.12 negative. That's what I'm talking about. So this is what we were supposed to do last week. Let's check on the hourly time frame. When were we supposed to go in and start shorting this one? If you are an aggressive guy, you could have started shorting. No, but I mean, this is the only one. You'd have, no, yeah, no. If you're an aggressive guy, You were supposed to go in on the 11th at the first hour of trading. This is the 1 hourly time frame. If you want to be a little bit short term, it's also very important. The first hour of trading is very important on a stock. Our market opens at 9. You see, we had a negative close, the negative first hour of trading. We opened at 300 and closed at 296.95. And the stock was down for the rest of the day. The following day, on the 12th, we closed below the simple moving average again in our first hour of trading, and it was negative for the whole day. Again here on the 13th, we closed the first hour of trading below the simple moving average, and we went down the whole day. So the first hour of trading is very important. You must keep an eye on it. Check whether the stock closes positively or negatively in the first hour of trading. If it's negative and the overall trend maybe on the daily or on the weekly time frame is negative, you can be sure that the stock um, will decline for the day or would decline for the day. So is there anything that you don't understand about what we've just looked at here doing the weekly analysis? From here, I want us to go to, we've done bulletin. I want us to go to DSY, RLO, and PIK using the weekly analysis. Okay, let's do RLO first. Let's do weekly. Okay, let's do 1 month first. 1 month is saying buy. Let's do 1 week. 1 week is saying buy. Obviously, daily is saying buy also. Oh, okay. It's not saying buy. It closed below the simple moving average on Friday. Friday, we closed below the simple moving average on the daily. Okay, let's go back to the weekly. I want us to focus more on the weekly on this one. I want us to draw those lines on the close and the open. That's your close because it was a positive week. So that's the range we need to look at this week. The range on RLO that we need to look at, we need to keep an eye on 82 and 81.38 or 81. 81.36 is the open and the close is 81.97 or 82. We need to keep an eye on those. So I'm marking these black. Or in fact, let me just borrow these. Let's look at the last week's bar. Last week's bar opened at 80. It closed at 80.81. Let us borrow these bars here and put them on this week. So this is what we were supposed to do last week. We were supposed to focus on 80.84 or 80 and that close which is 80.81. We're supposed to focus on that, waiting for buying opportunities. Do you understand that? This week we're going to be focusing on next week you're going to be focusing on last week's open and close, looking for some buying opportunities. If you look at this, it's more like a staircase. 1, 2, 3. 1, 2, 3. It's going up. Do you understand, guys? Sorry. Yes, yes, yes. You can analyze the same way on forex. We'll go there. We'll go there now. I'll show you Ututleng. You can do the same. It's not an opportunity to buy yet, but I will show you what to be on a lookout for. I will show you now what you need to look out for here. So last week we were supposed to focus on these. The open of 80.81. If you get a close above 80.81, it's an opportunity for you to go in and take a long. If you get a break below our open, which is uh, 80 bucks, it means that you should now start selling. But that never happened. The market went up. So now let's check. The first bar was above your simple moving average there. And this was on the 10th. Let me see. When did that week finish? It finished on the 6th. So on the 10th, you got a buy signal. In fact, you got your buy signal on the 9th first. This was on the 9th. The week began on the 9th. This close was above your simple moving average here. So that was a sign for you to go in and take a long, maybe exactly on this line here at 80. Exactly on this line here at 80, because we are above the simple moving average also. The following day, the 10th, the market had a positive close. Well, we are up 48 basis points. On the 11th, we were up another 0.74%. And on the 12th, we're up 0.7. On Friday, buyers tried to push the market down, but we are still above last week's close. We are still above last week's close, so this one is still looking good. But you were supposed to go in and take a long on the 10th on this one. You were going to make a little bit of money here if you want to trade short term. You're going to make a little bit of money trading from, let me see, let's say from 80 bucks, trading from 80 bucks or 80.71 up to, well, what was the high? Up to 82.50. Well, I mean, you were supposed to make a little bit of money trading like that there. Okay, let us do some analysis on the GBP USD. I want to show you this on the GBP USD. Let's just do the weekly only. We'll keep it on 2 years because we're not looking for a lot of data. We are only focusing on 1 week. We're only focusing on 1 week. We're not looking at a lot of stuff. I don't know if this is the stock that you'd like me to have a look at, Tutleng, but I mean, they asked me to have a look at this one. I think it's Arun who asked me to look at this one. After this, we'll have a look at the US dollar, Japanese yen. Okay. This is the week before last. Week before last, we're focusing on that. That's what we were supposed to look at last week. We're supposed to look at this one. The price is between these two levels here. And it ended within those two levels there. It did not close the week above 1.32. Okay, let's look at at those prices there, the open and the close. Please give me those, guys. Open and close on the British pound. Okay, okay, sorry, let me get the open there and the close. Close is 132,472. I'm happy with that. Open 131,352. Okay, I'm happy with that. So last week we were supposed to focus on those two levels there when trading the British pound against the US dollar. I can actually draw another line here, but I'm not going to draw that line. I can draw another resistance line here, but I'm not going to do that. I'll leave this area out. But next time I may do that. Okay, let's look at the performance. Okay, you see what the market did? The market went up there, it came down, it touched this area here around 131, and there were buyers waiting here at the previous week's close. And they came in, they pushed the price up. The price closed up there. Closed up there, but we did not breach last week's open. We are still within this zone here. Let me show you maybe if you are using a shorter time frame, what you should have done here. Shorter time frame is for aggressive people. If you are an aggressive guy, maybe you can trade this strategy. If you get the price below your support line at the top, it closes below your simple moving average, you can actually go in here and take a shot, targeting this area here. It took a number of days for the price to finally get there. It took a number of price for the price to finally get to 131,357, but it finally got here from that area there. If you had gone in here shorting, you could have had a couple of issues here. But I mean, if you had a wide enough stop, you could have stayed in that trade until it finally got here. And here at 2 o'clock, we closed above the simple moving average, closed above our support line. 2 o'clock yesterday, and the price started rising. Now the price is going up to that 1.32, or that close we're talking about. That close is 1.32472. We must keep an eye on this one on Monday. If it fails, well, I mean, it may go above this area, but on its way back, if it closes below that black line at the top, it closes below the simple moving average, you can start looking for shorting opportunities there for the price to come back down to this 131. If you want to trade the British pound, you can use this zone to trade the pound. Next, you can use this zone to trade the pound. But let me go back. The reason why I'm saying that you can use this zone is because last week really for me was a non-event. I mean, this is very small. This 0.36 is very small. So this line for me still counts. This 1.31, this 1.31472 still counts. What you need to do now is to add a line on our close here. This is our close. We now need to add a line here. The close is 131,989. Do you all agree? Last week our close was 131,989. We are now not looking at the week before last. We're now looking at last week's bar. That's where we closed. So our main focus on this one is going to be between these two levels. The black line at the top, which is 1.32467. and 131,989, this line at the bottom here. We are going to be looking at that now for the coming week. We must focus more on that. If you get a break below the simple moving average on the hourly time frame, break below this line here, you can actually go in and take a short down to that level there if you want to. If you want to do short term, or if you want, if you like, you can wait for this black line here at the top. If you get a break below the simple moving average, That's if the market opens up on Monday on the British pound against the US dollar. If the market rises on Monday, it goes up, you need to be on a lookout for a break below this line, break below the simple moving average on the hourly time frame. Then you can start maybe going in, taking some shorts. As long as the price is still below, as long as the price remains below the simple moving average on the hourly, you can just keep your short. Gets here, it tests this area. If it successfully breaks below this area here, you can wait for the price to come down to 131,357 if you want to trade the British pound. But don't try and buy the British pound. It's not really looking good. But I mean, the main thing are these levels here, these three lines I've given you here on the British pound. The three lines I've given you here, they are very important. They are going to determine whether this market rises or declines on Monday. So on Monday, we're waiting for the market to get to this line here at the top. If it fails, it starts coming down, it breaks below the simple moving average, you can go in taking a short. But you may get a situation where you get your price bouncing off 1.3199, going back up to 132 before finally coming down here. So you must be very careful when trading that one. This is short term. If you want to trade short term, you can use the weekly bars or the weekly candles to mark your support and resistance. It must, okay, there are two conditions. You break above your resistance and you break above your SMA. You break above your resistance and you break above your SMA. Do you understand, Pietro? Two conditions, not just one. Two. Break above your resistance, break above your SMA. See, like here, we went we went below the black line, the close. We traded below for a couple of hours, and at 2 o'clock we closed above the black line. We closed above the SMA. Both conditions were met, and the market started, and the stock and the current started rising. Sorry, the currency started rising shortly after that. Okay, now let's do the USD JPY. USD JPY. Our open, that was very tight. Our open was 110.88 and our close was 110.83. So let's go there. Horizontal. That's our close there. And that's our open there because we had a negative day. So our focus was on these two levels. The open was 110.88 and the close was 110.83. Any close below 110.83 could have triggered a sell in this market. Any close above 110.88 was good for the longs. Do you understand? And that's what happened. Now let's go to our hourly time frame here. I want us to focus just on the hourly time frame for now. But it's for aggressive people, guys that not willing to waste any time. Okay. The market on the 11th, it came down here. 11th was the new week. It bounced off. It respected this area. You see, every time it dropped to this area, it finished above each time. So it respected this area. Finally, at 4 on the 11th, we closed above the simple moving average and on the hourly, and we are above both levels here. We are above our open and above our close. Our open in this case is our resistance and our okay, but I mean the top line is was our resistance. Now it's our support. We closed above. The market went down for a bit, but it kept above the moving average, and the price started rising, rising until it got here. This is where maybe you were supposed to get out if you had gotten in around this area here. Maybe this is where you're supposed to get out when the price crossed below the simple moving average. But let me show you what we are looking at this week. This week we are looking at this long bar here. We are looking at this bar here. Let's put our price there at the top. The open on this one was 110.871. The close was 112.52. 112.52. So this should be our main focus this week. But this bar is it's very large. It's very large. So let's wait and see what happens on Monday. If on Monday there is more buying interest, we're going to see the stock breaking higher, breaking above last week's close, which is 112.52. I'm not going to mention the last three digits, but they're important also. Any close above this line there and above the simple moving average, it means you can start going in and buying this market, but we need to be above last week's close. You can mark last week's close. It's important. If we get an hourly close above that close and you get the close above the simple moving average, immediately after that you can go in and buy that market, because it means that there is a follow through. But any close below the simple moving average, below that line at the top, that horizontal line at the top, 112.5 something, means that you should actually get out of that market. It means you can get out of the market because that market is likely to reverse and give you losses. Okay, guys, did you understand this? Did you enjoy it? Do you think it's an easy way of analyzing the market? Is it difficult? If you don't understand it, where is the difficulty? Okay, Pietro, I'll go over that once more. Okay, I'll check the USDs. Forex, Joseph is saying Forex trading needs another shot. What do you mean, big guy? What do you mean by saying that Forex trading needs another shot? Oh, okay, no, that's fine. Okay, that's fine. We look at the USDs. It's okay. Okay. Okay, let's do 1 hour, Pietro. This week started on the 9th. Obviously, the price was below your your close here. The price went above, crossed above. You could have actually, if you are someone who's impatient, you could have used this one to enter a long on the US dollar. It went up, and here it went below. This is a red flag showing you that maybe the market is now starting to reverse, and it just jumped out down here, closed below. The following day around 3 in the morning, at 4 it closed above, and it stayed above this area here, and it shot up to that area at the top there. Right now we are below this area, so what we should wait for now, we should wait for the market to go up for longs. This is what we should do. uh, we couldn't have done this on Friday because I mean the market was still open. So we wanted to wait for the close of the week first before we can see this. We need the market to close above the simple moving average, close above that line at the top, that resistance. Once the market is trading above our resistance there around 112.5, that's when we can start looking for the long positions. For now, we cannot look for any long positions. But if the market gaps down, it continues going down, you can actually take a short when the market opens next week. If the market opens on Monday, let's say it goes down like this on Monday, it comes down here, you can actually take a short because you are still below this area here. So it means that maybe that market is likely to go down. That market is likely to go down. Make sure that you keep your stop above your simple moving average somewhere here, around 112.78. But this is an aggressive trading strategy. But if the market gaps up on Monday when it opens, it gaps up, it closes above the simple moving average, it closes above the resistance line, that means that that market is looking to rise. And if you check the weekly time frame is telling you that this market is most likely to rise. But we don't know if that is really going to happen. It may come down first before going up. I don't know if that's good enough, Pietro. But let's try and do the US dollars, see if we can get a better explanation for that one. Let's look at this week, the week of the 2nd of July, the first week. This is our close, and that's what we're supposed to use for the for our week that has just ended. Last week we were down 1.13%. So the levels that we're looking at, we're looking at that close, and in fact this open here. We opened that week. We opened at 1383, and we closed at 1340. Remember, we had said we were expecting the market to bounce off 1340. We closed at 1340, and we failed to respect that area. The market started declining, and last week we closed below 1340. So the market is coming down a bit. I'm looking at this market maybe coming down to 1315, maybe around 1315, 1305. That's where we can expect to see this market bouncing. Looking at the weekly candles. So I'm gonna mark this one black. This one black. I've got this one here because it was our resistance beyond the close. Another level beyond the close was that resistance there, which is last week of 20, the last week of June, around 1352. So now I want us to take this to an hourly time frame. I want to see what the hourly time frame is showing us here. Let's use the hourly. Okay. Okay. The week started on the 9th. The market went up. When it was above like this, maybe you could have wanted to go in and take a long, but I mean, we had some overhead resistance here around our blue line there, around 1352. Around 1352, the market turned, it closed below the simple moving average, closed below that black line, and it started dropping. But that drop did not last very long. It went up, closed above the simple moving average, above our line, and it went back to that same area where we have our blue line. It went up, but it did not stay above that blue line for a very long time. It closed below the blue line, closed below the simple moving average, closed below the blue line, and the price started declining below 1340, and now we have finally closed. We are below 1340. So now let me show you the levels that we are supposed to look for the new week. Let us take this line there and put it here. This close was 1329. We closed at 1329 and we've got our line around 1329. Now let's move this line away. We don't need it, I think. It's still important. You must still make sure that you keep an eye on it, but I don't think that we need it for now. We'll just take it away. We'll just take it away. Okay. The levels we are looking at 1340 and 1329 or 1330. We want to see how the market is going to react between these two levels, 1340 and 1329. I don't know what's going to happen. The market may decide to break down on Monday, come down maybe to 1315 before maybe rising again. I don't know what's going to happen. But the levels that you should keep an eye out for is 1340 and 1329. If you get the market closing below this area on an hourly closing basis, closing below the simple moving average, you can actually try and take a shot aiming for that 1315. If we close above this 1329 on an hourly closing basis, above the simple moving average, you can expect this market to go up to 1340. It's going to be very difficult trading this market. I think we are going to be very volatile, but 1340, 1329, I think they are the most important levels for us going into the new week. We should be looking at this. Any hourly close below 1340, if the market does go up there, 1340 below the simple moving average, you can use that maybe as an opportunity to go in shorting this market. But I mean, it's only 10 cents. That's very tiny. Maybe the level that you can wait for is 1315. I think it's possible that this market will come down to 1315. I don't know what it's going to do when it gets to 1315, but you can mark 1315. We have the three most important levels for next week is 1340, 1329, and 1315 on the rand. Those levels are very important. I want to see what the market does when it gets to those levels. Okay. Yes, Ututleng, Monday is very important to check what the market does or what the market is likely to do next. What I've noticed in my analysis is that you get your market is actually very choppy around Monday, Tuesday. That's when you really get to start to see like the proper trend in the market. The market is now starting to move in a particular direction. Then from there, it starts either moving up or moving down. Maybe on Tuesday or Wednesday, that's when you really find the trend or the good entry levels on. I mean, I've seen that mostly in currencies. I've seen that. That's when you can actually go in and start maybe taking buys. But on this one, on the rand, I'm looking at those levels 1340, 1329, 1315. I think the market is going to do something around those levels. It will either bounce off, move higher, or break and go down. But I doubt it will do that. Guys, I don't know if you have any questions. I hope I did not confuse you. If you have any questions, please ask. Let us try and answer them. We only have 2 minutes. We only have 2 minutes left. Okay, I'm glad you found this helpful, Ututleng. Let us wait for the new week to unfold and we'll see what happens. Thank you so much, guys, for taking your time out to attend our technical analysis session on a Saturday. Thank you so much. I will see you again on Monday. If you decide to join us on Monday, we run these sessions between 12 and 1 every day, except for Friday. Friday, we don't do anything. We do it on Saturday. Thank you so much, guys. Enjoy your Saturday. Oh, okay. Before I go away, let me give you my email address, Sile at QuickTrade trade.co.za. That's my email address. You can use that email address if you want to ask me anything. Okay, I'll do it for you now, Pietro. Thank you so much. Bye bye.